Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate filings, and today we might be looking at a company that is about to get a wake-up call. This report from zSpace Inc. is a bit of a heads up that their stock might be in a bit of hot water with the Nasdaq Stock Exchange. Yes, that is right. We're talking about a potential delisting. Stick around to find out what this means for investors and the company itself. Also, if you like getting easy to understand breakdowns of complex financial documents, smash that subscribe button. And hey, we have a growing Discord community where you can chat with us and other viewers about these deep dives. The link is in the description below. So what we have here is a Form 8K filing from zSpace Inc. Think of this as a way for companies to tell the public and the Securities and Exchange Commission, or the SEC for short, about big events that happen between their regular financial reports. And the big event here is a notice from the Nasdaq stock market. Basically, Nasdaq has told zSpace Inc. that they are not meeting one of the basic rules to have their stocks traded on their exchange. Specifically, it is about the market value of their publicly traded shares. Nasdaq has a rule that says a company needs to have at least $35 million worth of stock value floating around out there. For 30 days in a row, zSpace Inc. has fallen below that mark. Now, this doesn't mean their stock is going to disappear tomorrow. Nasdaq is giving them a grace period. They have 180 days, which is about 6 months, to fix this. To get back in good graces, their stock's total value needs to stay at or above $35 million for at least 10 business days. If they don't manage it, Nasdaq will officially say their stock is subject to being delisted. Then the company could try to argue their case in front of a Nasdaq panel, but there is no guarantee they will get to keep their listing. zSpace Inc. says they are aware of this and are looking into ways to boost their stock's value. However, they are being upfront saying there is no promise they will succeed. This is where things get dicey for any investor holding their stock. If a company gets delisted from a major exchange like Nasdaq, it can become much harder for investors to buy or sell their shares, and it can signal serious financial trouble. Just for context, the company's main product we're talking about here is their common stock, which is listed under the ticker symbol zSPC on the Nasdaq capital market. This report is essentially them admitting they are struggling to maintain that listing. Also, it is noted here that zSpace Inc. is considered an emerging growth company. This means they get to take advantage of certain perks, like potentially delaying the adoption of new accounting standards. This is a common thing for newer, growing companies trying to keep their operational costs down as they scale. Now, like almost all corporate filings, this report contains a section about forward-looking statements. This is basically the company's way of saying, hey, we're talking about future possibilities, but things might not turn out exactly as we expect. They mention things like anticipate, believe, and expect, and give a whole laundry list of words that signal these are not guarantees. They're trying to protect themselves from lawsuits if their future plans don't pan out. For example, they mention their intention to monitor their stock value and look for ways to comply with Nasdaq rules. But then they quickly follow up by saying there is no assurance they will actually be able to do that. This is standard SIA legal language, but it underscores the uncertainty of their situation. Finally, we have the signatures. This report is signed off by Eric de Oliveira, who is the Chief Financial Officer. This signifies that he, on behalf of zSpace Inc., is officially submitting this report and acknowledging the situation with Nasdaq. The date of the signature is the 28th of November, 2025. A few days after they received the notice. So what is the big picture here with zSpace Inc. and this Nasdaq notice? On the surface, this is a clear warning sign. A company failing to meet minimum market capitalization requirements suggests that investors are not valuing the company highly enough in the stock market. This could be due to a number of reasons. Poor financial performance, lack of investor confidence in its future prospects, or even broader market downturns affecting smaller companies more severely. The fact that they are actively stating there is no assurance of regaining compliance is quite stark. It tells you they might not have an immediate fix or a clear path forward. The main risk for investors is the potential delisting. If zSpace Inc. does get kicked off the Nasdaq, their stock will likely trade on what is called the over-the-counter or OTC market. Trading on the OTC markets is generally less transparent, less liquid, and can involve much higher volatility. It becomes harder to buy and sell shares, and the share price can plummet because it is much harder for institutional investors to trade there. This is not a good development for anyone invested in the company. For zSpace Inc., the challenge is significant. They need to either significantly improve their business performance to drive up their stock price, or find ways to manage their cash and operations under the assumption that they might lose their Nasdaq listing. Their options might include exploring strategic partnerships, undergoing a restructuring, or even seeking additional funding, though raising funds can be very difficult when you are facing delisting. In conclusion, this filing is a flashing red light for zSpace Inc. and its investors. The company is in a precarious position, struggling to meet a fundamental listing requirement for the Nasdaq. While they have some time to try and turn things around, the lack of confidence expressed in their own statement is a serious concern. Investors should definitely be watching this situation very closely, and it might be a good time to reassess their investment if they haven't already. Alright, that is our breakdown of zSpace Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.